Learn Accounting Podcast by Professor Accounting, Episode 6, Errors and Suspense. Let's have a look at this particular area of suspense. You have to go through errors before you can attempt any of the suspense questions in any of the exam boards. Let's look at errors which do affect the trial balance totals. So to start us off with an overview, errors can be made which will result in one side of the trial balance being different from the other side. So debit side could be higher than the credit side, or vice versa. The accounting equation does not hold true. That is the what is occurring there, since debits obviously looking at particular aspects of assets and expenses, and the credit side looking at liabilities and capital. It's not balancing. So just to go through the accounting equation, two versions of it. Capital equals assets minus liabilities, what I call CAL, C-A-L. Capital equals assets minus liabilities, and the alternative is to put assets as a subject. Assets equals liabilities plus capital. They're the two. You can obviously work out liabilities equals as well, but not essential. Lastly, a suspense account. So a suspense account will be required in this situation where one side of the trial balance does not agree with the other. So let me take you through what the suspense account looks like and means. If the trial balance doesn't agree, so one side is bigger than the other, then a suspense account should be opened for the difference, for the amount that the one side differs by. The trial balance will now be equal when you have a suspense account. So the errors must be found and corrected through the suspense account. So when we say a suspense account, we mean the ledger. Now finding errors, you wouldn't be expected to find errors because you can't in an exam. You'll be given them in the exam and you'd have to correct all the errors that they give you. The balance on the suspense account at the end, when you've finished, must be cleared. It must be a balance off, must be equal. Okay, so you'll learn this more with an example coming up just now. Just a quick look at the ledger, just very basic. Suspense account, we mean a ledger like this. Nothing to go in, just some tips. Nothing different about it. It still operates as a ledger, debit side, credit side. Usual double entry rules apply. So obviously debit entry left side, credit entry right side. And one key important thing with which is a tip for the exam, is when you finish a suspense account, it is a temporary account. So you don't keep a suspense account when you've finished and found all your errors. So when you've found all your errors that have been made and they're located and resolved, the suspense account is closed off and you no longer need it. So you only have a suspense account whether an error has been identified. Okay, if we just switch over now to Excel, I'll just show you an example. So I've got P accounting, there's basic trial balance there, debits and credits, and there's some obviously data in there. So observations that I want you to spot. There's 3 key points first of all with regards to that trial balance. Have a look at it. So in terms of errors, well, total debits equals total credits. So in this sense, there is looking at the purpose of the trial balance. The purpose of the trial balance, one of the purposes I should say, apart from to prepare the final accounts, a purpose of the trial balance is to check the arithmetic of debits and credits. And as you can see there, debits and credits, they're balanced, they're equal. So no errors have been detected by the trial balance. So is there a need for a suspense account in this example? No, because debits equals credits. Now take this first example and let's look at a very similar one, which is example 2. So use the same information in number 2. Let's look at this one now. So you can obviously watch the video back and forth again, look at the numbers that I've changed. Look at example 2. Now this one obviously is just the example of having errors. So the same information more or less, but let's look at obviously maybe something to do with suspense accounts and errors. So first of all, observations. First observation, trial balance has detected an imbalance between total debits. An imbalance, numbers don't agree. So between total debits and total credits, we can see over here, the debit is 163,260 and the credit side 162,260. That's debits 163,260. So there is a difference between the debits and credits of £1,000. So what is good to observe at this point is, rather than just do maths, is to acknowledge which side is higher or lower. So in this case, total debits are £1,000 more than total credits. Okay. Therefore, we will need a suspense account. You must use a suspense account when there is an imbalance between the accounts. So in this case, when a suspense account is required, go over to the ledger. I've left a line, go to the trial balance. I've left a space. We would therefore then write in suspense in the details, and we would put £1,000 in the column where we need it to make the totals equal. So the lower total is the column we're using. So that therefore will be £1,000, and that obviously will make it that the balances agree. So in this case there, £1,000 has been entered. Now, as I've said before, a suspense account is a temporary account. It's used until errors are located. If we refer to underneath, we look at the suspense account. Let's look at how this ledger, the suspense account we see on the screen here, how this will now be created now that we have just put in £1,000 suspense in the trial balance. Well, £1,000 has gone into the credit column of the trial balance. So therefore, we need to put £1,000 in the credit side of the suspense account. So £1,000 will go into the credit side, and that obviously will be called special name difference as per trial balance. Now you can obviously for peace of mind ease, you can use it as difference, but difference as per the trial balance is typically the phrase that we use when we create the ledger. So there's no opposites, there's no double entry taking place at that point. If you put £1,000 in the credit column of the trial balance, you're calling it suspense, that's the side that is created in the ledger account. So we've got £1,000 now. We have the suspense account in motion. It's now operating. We now obviously as a business, we now have to locate errors, spot errors, look for errors because the trial balance has been affected, and find the £1,000 discrepancy. Now in an exam you can't do that. You will be told all the errors that obviously would amount to being £1,000. So let's look at obviously the errors that you'd be given. The suspense account, as we've noted, it need to be closed off. There's no balance BD, no balance CD. We'll do that towards the end. But let's look at in terms of finding the errors. Mentioned that you'll be given the errors, and this is the errors that I've just put up on the screen for this podcast. So I'm going to give you sales were undercast by £900. Okay. As one error, and I thought I'll give you one error, but I'm going to give you two just to make it a bit more interesting. In a real question you have several, maybe 5, 6, 7 or so on, depending on how hard they are. So sales were undercast by £900. I'll give you the second one as well, and I've put this one a bit longer one. The debit entry for a credit purchase of £100 has been recorded correctly, but the corresponding entry has not been made. So I'll just give you those two. Let me have a think if you wish about it, but I'm just going to go ahead and show you this as a tutorial. So sales were undercast. So this casting is quite an important phrase in accounting. It just means that something is lower than it should be. So undercast, understated, the same thing. You've got overstated as well, but this is understated. So sales are lower in the trial balance than they should be. So sales are £100,000, so they should be higher, and by £900. Now you don't go into the trial balance and just change the value to 900. You can't do that because you've already created the suspense account, and the suspense is already there holding it in balance. So all your entries will have to be made in a suspense account. So the £900, if we think about the £900 in the suspense, sales need to increase. And what entry would that be? Well, sales are a credit. Sales are a credit balance. So credits are going to increase. So the other entry we need to make would be a debit. So we're debiting the suspense account. So the £900 is debiting the suspense, and it's a bit obvious. It has to be the debit side because you've got £1,000 over here that needs to be cancelled out. I don't always think that the answer has to be on the debit side when there is entries on the credit side, because you could easily get examples where you actually make the error worse and then correct it again with further examples. So I'll try that maybe if I get time to do a more complicated example. So there is the solution for the sales undercast sales. That is correcting the error. And then there's the last error the debit entry for a credit purchase of £100 has been recorded. So a debit of £100 for a credit purchase, well, what account would that be made in? Well, credit purchases, you're involving their creditors, because you're buying on credit, and purchases. So which account, purchases or creditors, would be the debit entry? Well, just look at the trial balance. Purchases are a debit balance. So the £100 has successfully gone into the 99,000. But as the error says, the corresponding entry has not been made. So that means a credit entry, the credit entry in that transaction has not been made. We call that a single entry error, because only one entry has been made and the corresponding entry hasn't. It's a single entry error, common error that makes the trial balance imbalance. So we need £100 to be increased, to be added to creditors. And that's what we would have. Well, we can't just go to creditors and increase it 22,480 by £100, because that would cause the trial balance to disagree and imbalance again, because we've got the suspense of £1,000 there. So we have to put the solution in the suspense account. So £100, which is going into for double entry, we will be debiting the suspense to remove £100 from this error, and that would be credited to the creditors. So I haven't done the double entry account here, but you can easily do a T account for sales and a T account for creditors, and the entries you make in those accounts would be the corresponding entries from this. So you're debiting suspense twice. You would credit the sales £900 and credit creditors by £100 in that case. Lastly, to go to a point here, the suspense account will be closed off. You should never come across a situation, if you've made a mistake, where you balance off the suspense account with a balanced CD. Both sides should be equal once you've finished. So when you're adding up the totals, this one a bit straightforward, you can see that £1,000 is the total for both. So if it balances, you're confident you've got it correct. There are ways of getting it to balance when you still make some mistakes, but if you haven't balanced when you've done your answer, any question, then go back and see if you can make it balance in some way by correcting it. So that is, in this case, make correct entries. That's what you're being examined on. You're being examined on understanding the errors and being able to correct the errors accordingly. AQA, OCR, they'll give you more errors. Some errors are quite cruel in a way. They give you errors that actually don't affect the trial balance. So you don't need to use them in a suspense account. So I'm not really going too much on exam technique here. This is more about an overview of just revising. Quite a lot of people have expressed some concerns about this topic. So hopefully this makes sense, and it is obviously useful to you. That's all in terms of this first podcast for this topic. If I just flick back to PowerPoint and just go through the last bit, just my contact details. I want to thank you for stopping by, and I'll see you again for another podcast from Professor Accounting.